What's up, everybody? This is Dr. Bartu with Pill Talk Podcast, coming at you live today on YouTube with Dispense is written. Special guest, my co-host, Terry Scipio. We're going to be talking about his finances and personal finances tonight. So make sure you guys stay tuned to learn a little bit about the stock market, some more of the history, and a breakdown of a lot of different things. So with no further introduction, let me let Terry introduce himself. What's up, Terry?
Hey, what's going on, bro? I'm glad to be back on part two of this three-part series on the stock market here. So glad for everyone that decides to jump in tonight, and looking forward to getting down to it.
Yes, sir. Yes, sir. So, man, seem like you still getting some things ready over there.
I am. I just need to do one quick thing and I'm good. All right. Good to go here.
All right. All right. So give me 1 second. I'm getting something up right now. Getting myself together. Man, how was the week, man? 2 weeks, no seeing, no talk about no stocks. How's everything going?
Man, things are going great, man. I was able to help a couple of clients this week establish some investment accounts, and got some people protected with some proper protection and stuff. So for me, man, it's been good. It's been good. How about yourself?
Man, hold on. Let me spit this gum out. My bad, y'all. But I did one of the most important things this weekend past was that I invested in myself. Went to Earn Your Leisure, Invest Fest out there in Atlanta, Georgia, and invested in myself, and my brand. Was able to sit down with other podcasters, see how they're doing their podcast, see how they're elevating it to the next level. I was able to sit down with other business owners who own trucks in the trucking industry. Was getting some information from those guys, seeing what was needed to elevate myself on that level as well, so that I can come back refreshed, energized, and ready to take over with, the trucking industry and with the podcast, because as you know, it's only up from here. We about to do major things. We're doing big things. So
That's right, man.
we got a lot of people. I see a lot of people now are actually noticing what's going on. Like walking through the venue, someone stopped me and was like, "Hey, you the guy from Pill Talk Podcast." Like it made me step back. I was like, "Okay."
So they know me in here.
Yeah, like, never met this person before in my life, and they stopped me and it was like, "Okay." I'm like, "Oh man," it was like, "I see you doing some things." We took a picture together, got that contact information. Like, yo, we're gonna try to build on that. Also, a friend of mine I saw out there, she was like, first question to me was, "Where's your booth?"
Where's your
I'm like,
booth?
"What?" She's like, "Yeah, where's your booth? You sell the merch, so you got a product, you got the message, you got the podcast, you here, like you in the building, but where's your booth?"
There you go.
I was like, damn, I should have had a booth. But going forward, I'm making sure I take advantage of all the opportunities. I took advantage of the opportunity of being in the building, but I didn't take advantage of the opportunity of winning in the building and getting it out more. But trust and believe, you won't catch me slipping again.
That's right. We won't miss that boat again. Well, good, man. That's what's up. I'm glad to hear that, man. I need to do more of that myself, invest in myself, and go attend these power conferences where people are talking about building wealth and building generational wealth. That's where we all need to be investing more time.
Yeah, because a lot of people, they hear about it and they're like, "Why are you paying for that? Like, what are you really learning?" Like the speakers give out good information.
Yeah.
Give out solid information. You know what I mean? A lot of motivational stuff, right? But the real information is the people sitting next to you for real. Like just sitting next to that podcaster, who got thousands of views, got hundreds of subscribers, all that good stuff, who's making money doing what he's doing, and knowing who I am, and he knowing who I am, and just sitting there having that conversation. He's like, "Yo, this is how you monetize it this way." I'm like, yo, how you gonna? I'm like, you gonna contact me with somebody? Like, no, sit down. Let me show you it right now.
There you
Like,
go. That's what I'm talking
right
about.
now.
The
Let's
people
go.
working together,
Yes, sir.
willing to share, man. That's what we're gonna do here tonight, man. We're gonna share some of this wealth knowledge tonight.
Definitely, definitely. You got to give it to them. Let me go ahead and make you the host so that
Okay.
you can share your screen. Give me 1 second, y'all. You are officially the host now. I hope y'all guys are ready because he about to give you guys some great information.
All right, man. Let me take the reins here, and then we are going to roll with it. Make it to get to my content here.
Oh, for everybody that's out here watching us live right now, make sure you comment in the comment box. Say what's up, say hello, say what you want to learn tonight in the stock market, because that lets the algorithm know that to get more people on board. Also, if you feel like it, share it too. Subscribe to the YouTube channel, because the more people that we can subscribe, get on to the channel, the more information, the better knowledge, the better we can do for you guys. So make sure you subscribe while you're on there.
Definitely. Please leave a comment, and we will respond to every comment that's left. So if you got a question, or if you want some content covered in the series that we're covering here on the first and third Wednesdays, anything about personal finance, just please leave it in the comment section below on the videos here.
Real quick, Terry, just in case they don't know about the series, we got a 3-part series. Break it down from the first, second, and the third part so that they can know where we are heading with the information.
Got it. So great point. So what I want to do is I'm just going to quickly recap what we covered last week. So last week we covered, so this is like Bartu said, this is a 3-part series on the stock market. And each week, or each session, we're going to cover something different, whether it be the stock market, personal finance, or protection, or retirement analysis, anything of that nature, anything about financial planning related, we'll be covering in our first and third Wednesday sessions here. But this is our 3-part series. Episode 1 covered the history of the S&P 500, which is the index that we're looking at here. And we went all the way back to 1970, and then fast forward and came up to present day, which is right as of now, September 1st, 2021. But in that episode, what we did was we just kind of gave a history about all the things that happened along the way, and gave the audience an explanation as to why the stock market may have taken a dip. And what I mean by a dip is when you see something like this happen on the index, where the index is up and then it all of a sudden falls for some weird reason, and it's up and it falls again and it falls again. So each one of those things are triggered by it could be triggered rather by a variety of different things that are going on in the economy, or going on in the particular business world. So these are things that we covered, and we will continue to cover as we go through this 3-part series. So last session was pretty much a history lesson on the S&P 500. Tonight's session, we're going to get a little bit more basic and give you like a 30,000 foot view of what I call some stock market basics. Ideally, and this is kind of like what the agenda is for the night, we're just going to talk about, what is a stock? What is a ticker symbol? And we're just going to hit all these points here until we're satisfied with the info that we're going to dish out tonight. And there's plenty more to this document, as you can see, but we're just going to touch on what you see in this top portion here. And ideally, these sessions will build on top of one another. So part one, history of the S&P 500. Tonight, more stock market basics. And part three, we'll talk about what are the characteristics that you need to look for if you want to invest in a particular index or if you want to invest in an individual company or individual stock. Hopefully that makes sense. And without further ado, we're about to get right into it.
Let's go.
All right. So a lot of people, say, hey, man, I get calls or a text message here or there, and people say, man, I want to invest in stock, man, and I always, ask them, I was like, well, first of all, do you know what a stock is? And, tell me a little bit about what you know. And in large part, and most of the time, I should say, a large percentage of folks don't have a solid understanding of one, the stock market, but let alone what these general definitions mean. So a stock just means like you have ownership within a company. So let's just say, because in the past, they used to actually issue out, like you would get a certificate that says, hey, I have ownership in said company, ABC company, right? Or Nike or Apple. And you would have those physical shares that you could, that would actually show ownership. Nowadays, stock is pretty much kept in what they call street name, meaning it's held with your broker dealer or whoever, like if you're contracting with, or if you have your account with whatever brokerage platform that's out there, the Schwabs of the world, et cetera. Those are the companies that will actually hold your stock. And the term is called held in street name. So a stock is nothing more than ownership or equity within a company. So like if you own a share of Apple or shares of Nike or shares of, say, Boeing, you would have ownership or you would have stock within that particular company.
Now, make sure if y'all want to own the stock, make sure y'all put in a group message ownership. Let everybody know you're trying to own the company. That's what it means to have a stock.
Yeah, own a fractional or piece of the company. And actually by owning a particular, shares within a company, you actually have some voting rights. You'd actually get a proxy in the mail for the company's annual meeting. And depending on your amount of shares that you actually own, your say in what happens with the board of directors and what the company actually does, you can have a pretty strong influence if you have a large enough ownership or share interest in that particular company. Now, this is one that stumps a lot of people. I ask them, well, do you know what a ticker symbol is? And they'll be like, a ticker what? And I'll say a ticker symbol. A ticker symbol is a 1 to about 4-letter designation that will give you an indication of what that company is. For instance, if we were to scroll down here and we look at this company right here, everybody knows, like even in your text messages, you might say, instead of writing out Facebook, you might write FB. And ironically, that's the ticker symbol that's associated with Facebook. And so everybody knows Facebook's ticker symbol, or a lot of people will recognize it. A lot of people will recognize Amazon's ticker symbol. Amazon ticker symbol is 4 letters. And you notice that Facebook is 2 letters. So knowing the ticker symbol of a particular company that you're trying to invest in is very important, because a lot of people were trying to buy Zoom when Zoom, first took off during the pandemic, because everybody realized that they were going to be working from home and they needed to have a Zoom account, right? So if you didn't know any better, you went out here and you just bought Zoom. And this is not the telecommunications company or the media company that you wanted to actually purchase. This is the actual ticker symbol for Zoom, the video communications company, basically the platform that we're using right now. So it's very important that you buy or you're familiar with the ticker symbol. Remember the 1 to 4-letter acronym that will describe the particular company that you want. So be sure that you're very familiar or have a good idea about what that ticker symbol is for that particular company that you want to invest in.
That's
This
a
is
good point you made right there,
that's a
to
very true
being
story
knowledgeable
as well.
about that.
It's a very true story as well, because if you go back and look at like the volume of this company back in March of last year, it was going through the roof. And actually, there was a report on CNBC about how people were actually going out and buying this company when they thought they were actually buying Zoom, the communications company. Interesting, right? Now, what is an index or an ETF? Well, generally speaking, everybody always asks me, what's a good place that I could go and just find out some information on the stock market? And I always point them to one of my favorite websites, and that's Investopedia. And this is nothing more than an encyclopedia online for the stock market. So if you actually had any question whatsoever about this is a personal finance website, but anything stock related, this is a great resource that you can tap into so that you can come out here and you can say, well, I heard on the Pill Talk podcast, I heard Dr. Bartu and Terry talking about this. Let me go and see what does that actually mean, right? And so if you hear a term or something that I don't necessarily cover or give you clarity on, come out here to Investopedia and just type it in the search bar up here, and it'll bring you right to whatever. And this is a great website for information. But let's just talk about what an ETF is, because I often recommend ETFs over mutual funds for several reasons. But let's just talk about what the definition of an exchange traded fund or an ETF is. So an ETF is nothing more than an index, or not an index, but it's a fund that actually tracks the performance of a given index or a given sector. So like, for instance, if you wanted to invest in financial companies, right, and you had no idea what financial companies that you wanted to invest in, there's a way that you can go figure out, okay, I want to invest in the XLF. Well, that's the sector spider ETF that tracks the financial stocks like Bank of America, Wells Fargo, all of the Morgan Stanley, JP Morgan, all the big financial companies or banks that you might think of. You can find those in the XLF ETF. So if you weren't very certain about which individual stock to purchase, why not buy them all? And an ETF will allow you to do that. An ETF will allow you to basically take some risk off by, if you just invested in one individual company, you actually get the whole swatch of that particular sector. That's one of the huge values in investing in ETFs rather than individual stocks, is you don't have to bank on just one company or one bank in particular actually being profitable. You can play the whole sector. That's one of the main benefits to an ETF or exchange traded fund, is that you're not locked into one company being the savior. Because after all, as you invest your money, you want your money to be spread around in different areas. You don't necessarily want to put it all on black. Like if you go to Vegas and say, hey man, I'm putting it all on black. You know what I mean? At the roulette table.
So I've got a little input real quick, little backstory from how, when I first started investing into the stock market, like I was just like any other investor, just trying to find a way to get the money to work for you. Mm-hmm. Like how we talked about earlier, trying to make your money become 24/7 employees, right?
Right.
And then you hearing about different stocks that's going up. And then somebody was just like, yo, instead of buying that one stock, and if that stock fails, you lose everything. Mm-hmm. Get into S&P 500 ETF. The ETF has lower fees than mutual funds. Mm-hmm. And that way, if one company does bad, you still got 499 to hold you up.
There you go.
And I was like, yo, brilliant.
And you don't,
I'm not even risking any money now. It just guaranteed wins. Obviously, investing does have some risks, I just had to put that out
Yeah.
there. But I got a team of 500 instead of one.
That's right. And you can't get any, everybody always touts having a diversified portfolio. Well, you can't get any more diversified than having 500 different plays in the basket, if you get what I'm saying. So speaking of which, so let's say somebody wanted to invest in the ETF that tracks the S&P 500. Well, you can come out here and you can come and buy this spider sector. And by the way, this is only one ETF that tracks. There's many different other ETFs that tracks the performance of the S&P 500, but the spider sector S&P 500 ETF is the ticker symbol for it is the SPY or SPY. And so if you're looking to invest in the S&P 500, but you can't necessarily afford to buy it outright, the SPY is a great way to give yourself that diversity and give you that exposure to equities that are that's held within the S&P 500 index.
Quick thing real fast, since we mentioned SPY, the S&P 500 indexes. So if you guys get onto something like a Vanguard or a Fidelity, that's two of the big ones that I can think of off the top of my head. And looking to invest in the S&P 500, they all have their own version of the S&P 500.
That's right.
And they have their own version of different sectors that makes up the S&P 500.
That's right.
Terry's going to break that down a little further too. So
yeah, and we're going to get into that here toward the bottom down here of tonight's podcast. So we just talked about the SPY, and that's the ETF that tracks the performance or mirrors. If you want to just say, I want to trade, I want my portfolio to mirror exactly the return of the S&P 500. Because again, we talked about this in our last podcast episode too. A lot of people say well, the stock market returned 30% last year. Well, a lot of people needs to understand that if you wanted to get that 30% return, you would have had to have 100% of your money invested in the S&P 500 index or the SPY in order to get that 30% return. But if you had, say, some invested in the S&P 500 and some invested in bonds, which is what most people typically do, then your return wouldn't have been 30%, because bonds were in the trash last year and was very subpar. And actually the returns on a bond portfolio were, I think, negative last year for a period of time. Your portfolio would have reflected that. And therefore, instead of you getting that, say, 30% return on the S&P, your return might have been, say, 15%, because you had a negative performance from bonds last year. So just understand that if you want the return of the market, you need to make sure that your investment approach mirrors that. And if you are somebody that has the stomach to be 100% invested in all stocks or all equities, then go for it. But if that's not your cup of tea, then don't be expecting to get returns that mirror the S&P 500. All right. So what are the indexes that track the overall market? So we talked about the S&P 500, but there are two other major indices that actually track the performance of a given sector. And so we're going to talk about those real quick. So a lot of people have probably heard of the Dow Jones Industrial Average, right? So the Dow Jones Industrial Average, this is the Dow Jones Industrial Average Index right here. And this particular index tracks 30 of the most well-known blue chip companies. And what I mean by blue chip company is it's a company that has a very strong track record, company that's probably been in business, 25, 50 years or 100 years or more, like a strong company like a Boeing. Boeing has been around since like the 1900s, right? So Boeing, everybody and their mom across the world knows what Boeing is. Boeing has several different industries that they participate in: military, They have an engine develop component department. They also have, obviously they sell planes and all that good stuff. Another very blue chip company that's been around since the early 80s, Apple, right? Everybody knows Apple. Most people probably got an iPhone or have had one or an iPad at some point in their life, right? Or maybe your kids have finally bugged you enough that you actually went out and bought the iPad that they've been begging you for the last 2 Christmases, right? Another blue chip company that participates or sits in the Dow Jones Industrial Average is Microsoft. So if you think about some of the biggest companies in the world that people know on a worldwide scale, those are the companies that actually sit in the Dow Jones Industrial Average. Right now, it's currently only 30 companies that sit in there, but these companies are typically designated for the Dow Jones Industrial Average because they have one thing in common. Their market capitalization, or how much the company is actually worth, is typically a very large number. Like, for example, Microsoft here, it's valued at over $2.2 trillion is the market cap or the overall value of Microsoft. So that's one of the 30 companies that sit in the Dow. If you look at Boeing's market capitalization, right? Boeing, it has a market capitalization of $127.8 billion. These are numbers that most of us will never see in our lifetimes. Another company that sits within the Dow Jones Industrial Average is Caterpillar. If you think about, if you are a young man and you grew up playing with any toys or whatever, you probably had a Caterpillar dump truck or Caterpillar bulldozer or whatever. I know my son has quite a few of them and he loves them. But these are well-known companies that everybody has probably heard of at some point or another in their lifetime. And so that's the Dow Jones Industrial Average, 30 blue chip stocks. That index, if you wanted to buy that ETF or wanted your portfolio to mirror the returns of the Dow Jones Industrial Average, you could actually come out here and you could purchase the DIA, right? Or the DIA. That's the ETF that tracks the performance of the Dow Jones Industrial Average Index. Now, the final index that we'll touch on here that everybody is probably familiar with is called the Nasdaq Composite. Now, the Nasdaq is typically known for being a tech-heavy index, right? So if you think about all the technology companies, the well-known technology companies that you can think of, Facebook, Apple, Microsoft, and by the way, a lot of these companies sit on multiple indexes like Apple, Google, Netflix, Facebook. Those are what you call the FANG stocks.
Mhm.
Those sit, Apple sits on the Dow Jones Industrial Average, also sits on the Nasdaq, also sits on the S&P 500. And because these companies sit on all three of these indexes, what you'll find is the stock chart of Apple, let's say, will pretty much mirror the performance of the S&P 500 because these technology companies have so much of a weight associated on these given indexes, or meaning their representation on a given index in terms of the proportion of how much their stock influenced that index is so great. Therefore, if technology is typically having a bad stretch or whatever, then the stock market overall of the S&P 500 is probably going to feel that to some degree as well. So getting back to the last index that we're going to look at for this evening, and that's the Nasdaq Composite, tech-heavy index, Facebook, Google, Apple, all those bad boys. If you wanted to purchase the ETF that tracks the performance of the Nasdaq Composite, one of the ETFs that you could choose is the triple Qs or the QQQ index, also denoted by the Invesco Triple Q Trust series. That's if you wanted to look up the formal name of it. But again, this is an index that tracks technology. So if you wanted to invest and you didn't want to choose one individual technology company to invest in, and you said, man, I want the whole thing, I want it all, then you can come out here and you can purchase individual shares of the triple Qs. That makes
And
sense.
yeah, yeah. I don't want people just to look at the screen and understand what they're looking at. As you see
These
you
candles.
yes, as you see the candles have a upward trajectory. It has some dips in there, but as you can tell, just from I think that's July of oh, you done moved it on me now.
Right here.
You had it in there, but it's still the same thing. So you can just see from 2020 all the way to October. No, that's what is it? September. It went basically straight up. A dip,
So
then up,
so
dip, then up.
let me just give you an explanation as to what you're seeing here. So this is the fall of the market here back in February and March of 2020, right? And so what most people realize, or what we all realize, is that yes, the market was in terrible shape at this point, but there needed to be something that was going to lead us out of the turmoil. And everybody, most companies had to turn to technology because companies couldn't just shut their doors, right? They had to figure out a way to operate. So therefore, the reason why you see such a parabolic move here on this particular ETF or this particular index is that technology led the charge out of the pandemic. And so you saw companies like Square, you saw companies like Twilio, or cloud-based companies, or divisions within Microsoft. Their cloud services went through the roof because companies were forced to bring forward their technology plans that they were probably delaying on buying software. A lot of these companies experienced growth, 10 years worth of 5 to 10 years worth of growth in a year's time, because companies were forced, or corporations were forced to move forward with their technology plans. And therefore that transcended into a rise in the technology index. And that's what you see here. So obviously, if you would have got greedy here when the technology fell off a cliff, or the entire market fell off a cliff, you would have been looking really good right now, and really clicking your heels if you had bought back here and just held this ETF or the triple Qs up until this point.
Yeah, just one more time. I don't think they heard you on that one. Like technology led the charge out of the pandemic, as you
That's
can
right.
see. So if you listening on the YouTube channel right now, go ahead and put that out there. Technology led the charge.
Led the charge out of the pandemic. And in large part, companies are still dependent on technology because we're not fully open right now. But the valuations of some of these technology companies might come into question because it's now, okay, now everybody has the technology that they were going to buy or were delaying to buy. They already bought it. So now looking forward, what do the companies, as far as earnings go and the future performance of revenue and all that stuff, how does that look? What's the prospects of that? Can this trajectory continue? Absolutely not. So therefore, you would call into question some of the valuations of some of these technology companies, and it would probably be a good idea to probably book some profit at this point.
Yeah, yeah, because as you can tell, Zoom kind of took a dip, but
Huge hit. And Zoom is a prime example of, everybody and their mom bought Zoom already, right? So let's just go to Zoom's stock chart right quick. So, if you actually look at the dates that's associated with when Zoom start to see a decline, what you'll see is that kind of mirrored when the vaccine became available, right? Vaccine came available, or they had started talks about the vaccine being developed and possibly getting through the FDA. And what you'll see is that coincides with this dip or this downtrend, what we call a downtrend. If you are somebody who actually studies the stock market, what you see here is a series of lower lows. So this low is lower than that one. This low is lower than that one, meaning the price of Zoom, the price here is lower than this one. This low is lower than this one. This low is lower than that one, and so on. So as you can see, a lot of factors, as we talked about history on the S&P 500, this is looking at history on Zoom, right? History on Zoom says, okay, when the vaccine got developed and now been pushed out over these last, almost a year here, or 6 months to a year, we've seen a price decline in Zoom because now what the stock market is pricing into this particular company is saying that, okay, well, this revenue projection is probably not sustainable. So therefore, I'm going to take my money off the table. I'm going to take my profit off the table, because if you go back and look here from March, Zoom came from a price of $73 back here in January of 2020 and went as high as like over $565 from January 2020 to October. So in 10 months, the price rose from $73 to $560 something. That's clearly not sustainable growth. And therefore the stock market or the stock price has reflected that, and the stock has pulled back or taken a hard dip since then. That makes sense?
Yeah, definitely makes some sense. And it's just so funny that, not funny, because some people did lose money, but earlier we talked about Zoom and how people was booking or buying the wrong stock because of the ticker symbol. They was buying the ticker symbol Zoom, ZOOM, and the actual ticker symbol for Zoom that they wanted to look for was ZM.
That's right.
Make sure you be careful when you're buying the stocks. Make sure that you understand the ticker symbol and read the actual designated name of the stock that you're about to purchase.
Exactly. That's a great point. Great point. And so now let's go to something else that's more elementary in terms of understanding. When you hear, I know some people may, maybe you're surfing through the channels and you happen to stop on CNBC and you hear these people talking all this gibberish, and you're like, man, I don't know what the heck these people talking about. They talking about animals. They talking about bears and bulls and stuff. I don't know what they're talking about. So I just want to give some people some perspective or some understanding about what that gibberish actually means. So being a financial planner or financial advisor, I like to, impart or train my children to understand this stuff. And so I try and make things simple when I explain it to clients, because I want to be known as somebody that can take something that's seemingly complicated and break it down and make it digestible for anybody to understand. So when you think about a bull, right? If you think about the animal, the bull has horns. And when the bull gets angry, what does the bull do?
Are you going to ram you with his head?
Right. He charges forward with his horns coming straight at you because he wants to toss you up on his horns, right? That's his way of imposing his will on you. He's going to impale you with those horns and toss you up in the air. Right. So if you think about if you're someone who says, man, my sentiment or my opinion of the stock market is bullish, if you just think of the animal and you think about this visual that I'm giving you here, a bull has horns. He likes to throw things in the air. So if you are somebody that has bullish sentiment, you believe that the stock market will actually trend higher or go higher over the short term or over the longer period of time. And vice versa. If you think about a bear, right? You think about a bear, huge animal, has huge claws, right? Huge claws. And what bears do with those claws is they claw things down. Like if you go through the forest, you might see some claw marks on a tree. That's probably from a huge bear, right? So if bears claw things down and you are somebody that has a bearish sentiment or a negative outlook on the stock market, then you're somebody who believes that your sentiment or opinion toward the stock market is bearish, meaning you believe the stock market is actually going to go down, right? And so these two, a lot of people during the GameStop fiasco and meme stock fiasco probably heard a lot about a short position or short squeezes, and you're like, well, what the heck does long and short mean? Like, I'm not buying pants. I'm trying to buy stock here. What I want short or long for, right? So a short position means exactly what bearish means. Like, you're going to take a position against a particular stock or a particular company or ETF. And if you're short that particular position or that particular company or ETF, you believe, or you have a bearish sentiment. So you believe the price is actually going to drop. So a lot of people don't know this, but you can actually profit on a company's stock price falling by taking a short position. Now, this is a very risky position to take, but if you know what you're doing and you've actually, studied, you could actually profit from the stock market actually falling or a given company falling. So this is an easy way to remember this. Bearish sentiment and a short position mean one and the same. And if you can remember that a bear has big claws and he likes to claw things down, you can remember that, okay, if I have a bearish sentiment and this person is taking a short position, that means, oh, they're thinking that this company is actually going to fall. The stock price is actually going to fall. So they took a short position, or they have a bearish sentiment. And the opposite is true for a long position. If you're long something, right, a given company or a given stock, you believe that you're bullish on the company, and you believe that actual company's value will actually go up in the long run or in the short term. So you can say, I'm going to take a long position, or another way to say it is, I'm bullish on Apple, or I'm bullish on Microsoft long term, or I'm bullish on Boeing long term, because I believe that the company is still undervalued based on where it was trading before the pandemic, and it still has room to grow. That makes sense?
Yeah, it makes perfect sense. That actually answered some of my questions that I had in my head. I was thinking about hearing the short and the long and not really knowing exactly what it was. And then you just breaking it down in those easy to get little phrases right there just helped me a lot. So now going back into it, listening to the market and all that, I'm gonna be a whole lot more knowledgeable about the short, long. I knew about the bearish and the bullish, but yeah, just like how you describe it, bull tosses its whatever up,
its horns,
and the bear knocks everything down. So yeah.
That's right. And bearish is synonymous with short. Bull is synonymous with long, a long position. So now that we got some of those basics out of the way, let's talk about how do we find some ETFs, right? And this is a cool way that if you like a particular sector and you say, man, I wonder what companies are in the healthcare sector, or I wonder what companies make up the information, the IT sector in the S&P 500. Well, I'm glad somebody was inquisitive enough to ask that, right? What I'm going to show you is how you can go out here to the Sector Spider website here, and you can go find what companies these are. So in essence, you can kind of work backwards. You can say, man, I see, let's say you spot a trend in a given sector. By the way, S&P 500 has 11 different sectors: IT, healthcare, financials, consumer discretionary, communication services, industrials, consumer staples, energy, utilities, real estate, materials, right? So if you wanted to invest or figure out what companies fall under these, I think you asked about REITs last time, right, Bartu?
I did.
So let's go to the Sector Spider website and see what companies or what REITs fall within the real estate ETF on the S&P 500.
Yo, everyone that's listening, if you want to know about a particular sector, make sure you leave a comment inside the YouTube live right now so that we can go ahead and check that sector out. Out of the 11, we can choose the one that you guys want to talk about to give you some more information on that. But back to you, Terry.
For sure. So let's say you were somebody that said you listened to our first episode and you said, man, I heard them talk about REITs. I want to get in on that, man. I want to see what companies are in there, right? So I'm gonna come out here and I'll put in XLRE since it's not letting me click on it over there. And so it'll bring you to, here we go. I'm about to say, man.
I was thinking the same thing. I said, come on now, no
work.
hiccups now. We're doing good.
So let's say somebody, so kind of keeping in tune with what we've learned tonight thus far, right? Let's say that we wanted to buy the ETF that tracks all of the companies that are real estate companies that are within the S&P 500. And let's just say we're bullish on real estate for the short term or for the long term, right? So just reviewing what we've learned tonight, we said ETF, or an exchange traded fund that tracks the real estate sector within the S&P 500. So we're looking at real estate companies that are within the S&P 500. We want to purchase that ETF, but more importantly, we want to know what are some of the companies that make up the XLRE, which is the ticker symbol that's associated with the real estate sector of the S&P 500. Okay. So what we do is we go over here to portfolio on the Sector Spider website here, and we can see, okay, these are some of the companies or the REITs. So American Tower Corporation, this is a REIT. AMT is a real estate REIT, or one of the companies that's within the S&P 500 that actually falls within the real estate, the XLRE ETF that's on the S&P 500, right? And so you can come out here and you can see a full list of companies. Simon Property Group, we looked at this REIT the last time we were on the last podcast, right? SBA Communications. So this is how you can work backwards to figure out what are some REITs that I would like to invest in. And then you can go back and you can use some of the knowledge that we looked at and say, okay, is their chart? Let's go to AMT, right? Let's just look at that ticker symbol. Let's just go and look at their chart and let's just see what the trajectory, meaning is it an upward trajectory, which is a positive thing for a stock chart, or is it in a downward trend, much like Zoom is right here? So let's just go and see, because if it's in an uptrend, that's a positive thing that we want to capitalize on and potentially look at adding that company as part of our portfolio. And what we can see here is that since March of 2021, this thing has been looking really good. So AMT has been on a tear since 2021. And if we measured this move out, meaning we can see how much of a gain this has been since March of this year, right? We can see that this AMT, this company, is up. What is that? Uh-oh. Let me move my chart down here a little bit so I can actually see what I'm doing. Move this over. So let's just see what the percentage gain is from this point in March of this year all the way up here to September of this year. Look, you would have been up 50% had you bought this, meaning, again, what do we do when the stock market falls, Bartu?
Listen, when everybody is fearful, you got to be greedy. So when the
greedy.
stock market falling, you got to be buying in. That may sound hard for some of you new investors, but I promise you it will work out in the end if you invest in great stocks.
Right. You want to be counterintuitive. That's what Warren Buffett always preaches. It's like you want to do the opposite of what everybody is doing. So it's counterintuitive, and it is very scary if you don't do the proper research and study and just realize that if you actually do what Warren Buffett has suggested, in more often than not, we can't say, but higher probabilities say that you're going to be successful in the long run if you take a shot i.e. when it's a low risk time and the stock is actually beaten down, but it's a relatively good company, you can see that over time you will be rewarded for the most part.
Yeah.
But back to the real estate ETF. So this is, again, people, this is how we can work backwards to find companies that we actually like. We can come out here to the ETF on the sector spider, and we can find individual companies that we like. We can go and look at their chart, and all we're simply doing is looking at, okay, is this stock or company in an uptrend, or is it actually falling? You don't want to try and catch a falling knife, do you? So why would you want to try and catch a company where its chart looks like it's just falling off a cliff? So this is different, right? AMT was falling here, then you see this downtrend here, then you see this strong bounce. After you see this strong bounce right here, that's a change in character on the stock or the ETF. So once you see that change in character, so if I was looking at this, I would say, okay, I see this trend line here. And what I see is every time that this stock tried to actually reverse trend, it came up here, got rejected. Fell some more, came up, tried to recover, got rejected. Came down a little bit more, tried, and actually made a strong move, but what? Got rejected. And then after 3 times here of this thing hitting its head at this level and getting rejected, when it got here, it actually pushed through, and there was enough momentum behind the stock and enough volume behind this particular company that it actually pushed it above this downward trending level. And that's the time where you say, okay, that's a change in character. That's a bullish development. I actually probably want to take a position now. Make sense?
Good stuff. Good stuff. That's something to learn. I just learned right there. Changing character.
Yep. Changing behavior, changing character for the stock.
So if anybody out there listening right now, go ahead and subscribe to the YouTube channel, get a change in character, and be bullish on Pill Talk Podcast. Dispense is written.
I like that, man. That was good. That was real good. Now, what's another one? What's another sector that you like to take a look at, Bartu?
And you know me, Dr. Bartu. Let's get into healthcare.
Okay. So let's see what are some of the healthcare companies that make up that's within the S&P 500. And I don't know if you guys noticed this, but notice these ETFs are reasonably priced. If we looked at trying to buy AMT, so, okay, we can own a portion of AMT, right? If we buy this ETF at $48.50 per share, or we could come out here and we could try and buy one share of AMT by itself, and it's costing you almost $300, right? So typically what you'll find is an ETF is a bargain deal to actually invest in some very strong companies. That makes sense?
Let me say one thing while you got this up too. As you can tell, AMT is having a strong run right now. And on this index, it holds 13.17%. So you're getting a strong company that's majority, but have a big position or the top position in this ETF. So instead of spending $300 just for that one company, you would spend $50 to get this strong company and plus all these others. So that's something else to look at.
That's a good point that you brought up about the weight here. So the weight of a given company within an ETF will largely determine, depending on the weight, right? So we can see that these top 4 companies here, this is what, 15, that's 24, that's 37. That's 37% of this ETF is made up of, the weight of it is made up of these 4 companies right here. So in large part, then, if these top 4 companies make up 37% of this ETF, that means the stronger run that these top 4 companies have, typically that's going to push this ETF higher. not regardless of what these companies do, the rest of the companies within the ETF does, but a large weighting of the company or a large weight or the performance of this ETF is dictated by these top 4 companies within the ETF.
Yes.
All right. So let's go here back to healthcare, right? If you said, hey man, I really want to invest in all of the companies that are within the S&P 500, how could I get some exposure to those healthcare companies? Well, you could come out here. If you were looking at the sector spider ETFs, again, you got iShares out there. You got all these, everybody, a lot of these big brokerage houses have ETFs that they choose to make up a given sector. But within the sector spider ETFs, you can look at the XLV. And again, just like we did on the real estate ETF, we come out here and we look at the portfolio or the companies that make up this ETF of the companies that are the healthcare companies that are within the S&P 500. And then we can come right here and we can see Johnson & Johnson.
Number one.
Everybody and their mom have, I don't care if you're 50, I don't care if you're 80 years old or just newborn, right? You done had some Johnson & Johnson rubbed on your bottom at some point, right? So everybody know who Johnson & Johnson is, right? My kids definitely know who Johnson & Johnson is. United Healthcare Group, right? That's a lot of these group health insurance plans that's out here for most corporations are sponsored by United Healthcare. Pfizer, you talking about the vaccine, right?
I was about to say, I use the Pfizer vaccine every time I'm at work. We giving out the shots, first dose, second dose, soon to be giving out the booster dose. So that's the third dose of the Pfizer vaccine.
So again, just to see, okay, we can see that, okay, these top 3 companies right here, these are the top 3 companies that make up the largest weight within this healthcare ETF on the sector spider ETF XLV, right? So again, we can work backwards. Let's go and look at the chart of Pfizer, J&J, and United Healthcare. I think we all know what this probably is going to look like. Which one would you want to take a look at, Barty?
Yeah, let's go ahead and slide off on that Pfizer though.
Pfizer, PFE. Now, after you do this for so long, it's just weird how you just become familiar with a lot of these ticker symbols on these companies.
And if you don't know what a ticker symbol is, make sure you go back and rewatch this video at the end to remind yourself what the ticker symbols are.
Definitely. So we can see here, again, this probably coincides or has a lot to do right up in here about when the vaccine was probably approved. And then we see a huge, like everybody, when I say parabolic, I want people to think about algebra class, right? Back in middle school or high school, whatever. You remember those parabolas, right? That you used to draw or the graphing calculators used to draw for us, or you can go back to stat class and look at a parabola also. But this is a parabolic move. So it looks like a parabola, right? Because the parabola kind of goes up like this and then kind of goes like that, right? But this is a parabolic move. Essentially, it just went straight up like that. So when I say parabolic, that's what I mean. Well, that's the reference to it. So what you see here is a strong run up, even from, if we just took it back from here, from March of this year, you got this strong run up here on Pfizer, largely due to, government funding and, that had an impact on its revenue and its earnings and all that stuff. So it made great revenue and projected revenue for Pfizer. That's why you see this strong rise here. And you got this pullback, right? So again, stock pulling back. If it's still in an uptrend, which it still is, you might want to take a shot. If you're in the market to buy some stocks. That's not financial advice, by the way. You consult your own financial advisor.
The disclaimer.
That's right. That's that disclosure out there now. But yeah, man, this is I hope this is, I've explained this in such a way that people can understand it and digest it pretty easy.
If you got time, I got one more sector someone wants to know about, because we talked a little bit about QQQ and how technology was leading the charge out of the pandemic for the stock market. People want to know, what are your thoughts, or what's the top stocks inside the SPDR ETF for technology?
Okay, so we just look at that's the XLK. So we look at the XLK, technology sector within the S&P 500. Okay, go.
And anybody, if you got questions, you can hit me directly, or you can put it in a YouTube live chat, so that we can all interact with each other. They can ask. You can ask a question, they can answer. Someone else watching, and we can answer your question here live on YouTube. Dispense Written Wednesdays, first and third Wednesdays.
So what I want to do here is just kind of go back, right? So let's just kind of do the same thing what we've done before. Let's just go to the portfolio. Let's see what's in here. And what we're going to do is we're just going to see, okay, don't just take my word for it. I often tell my clients this too. Don't just take my word for it. Trust but verify, right? Go back and do your own research too. So that's what we're going to do. We're going to go and look at the chart of the XLK, and we're just going to see, did technology actually lead the charge out of the pandemic, or is Terry just, telling tall tales, right? So first and foremost, what you want to note here is, what are the two companies that make up a huge weight? Now, also, I want to point this out, right? So how many companies, how many per page do we have here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And we got 2 pages, 3 pages, 4 pages, 5 pages, 6 pages, 7 pages, 8 pages. We got 7.5 pages. So we got pretty much 75 stocks in this particular ETF. But here's what I want people to notice. We got 75 companies within this ETF, right? But look at the 2 companies that make up 40%, over 40% of that have pretty much, think of weight like this. How much influence does a company have on a particular ETF, right? And we can see that the influence of Apple and Microsoft on the XLK ETF here, they have a 43% influence on the performance of this ETF alone, right? That's huge. You got 2 companies out of 75 here that influence the performance of this ETF. So more than likely what you'll find is, if Apple and Microsoft are performing well, this particular ETF is going to perform very well, right? Matter of fact, I remember when I had a client, she asked me, she was like, Terry, what should I invest some money in? And I was like, if you really like technology and technology is leading the charge, I think she invested in the XLK when it was like $95 or something last year. And look at it now, it's at $158. So let's go look at the XLK. We're just going to type in the ticker symbol. Again, ticker symbol is a 1 to 4 letter moniker given to a given company or given ETF. So we're going to look at it and we're going to say, okay, was Terry just telling tall tales about technology leading the charge? And lo and behold, we can see that the brother was actually on the one. The brother actually knew exactly what he was talking about here.
And Terry's great phrase, his special word, parabolic.
This thing, I mean, it looks just like a rocket, right? It looks like a rocket just shot off from here from 2020, March of 2020, and boom. I mean, it just took off.
Yeah.
So, when you actually study and you research and you know what you know, you're confident, you can have confidence in making recommendations, or just be confident in what you choose to buy if you're trying to do this on your own. But, again, we're just here to give information to help you be more well-informed and give you a sense of, have that sense of confidence so that you can go out here and if you chose to do some of this on your own. But it's always good. Like I always tell my clients, I deal with a lot of clients in the medical space. It's like, I always ask them, when it comes to their contracts, I was like, did you read your contract? And did you verify that the factors that they're using to calculate your bonus is in line with the industry standards, right? And I always say, listen, this is the scenario I use. I say, it's just like if a patient comes into the pharmacy, right, Bartu?
Yeah.
If you encounter a patient or potential patient that is coming in and they're asking some really great questions, right? You tend to spend a little bit more time explaining to that person because you know that they've at least taken the time to invest in whatever drugs they're coming to pick up from you, right?
Mm-hmm.
And it's not that you treat them different, but you understand that they have taken some time. So therefore you tend to pour in a little bit more to that person. So a job interview is no different. If you come prepared to your job interview, or you just know what you know, right? And you're asking great questions, you typically get a different type of response than somebody who's just kind of taking anything at will.
Yeah.
So trust but verify, do your own research so you can be well informed, and you can just ask good questions when you're talking to another professional, whether it be someone in the financial space or in the medical space.
Yeah. So just so they can see the correlation of how those weighted companies push this ETF in that direction, would you mind looking at Apple or Microsoft so that they can see how they took that same kind of trajectory upwards as well?
So I mentioned something earlier, right? I said the S&P 500 typically kind of moves along with technology, right?
Mm-hmm. Yeah.
I want people to just, with your mind, just take a snapshot of what this index looks like, meaning the pattern of its chart, right? From this little W pattern right here to this pullback here, this pullback here, this pullback here. What you're going to find, hopefully, well, Bartu, I would just want you to do this as an exercise, right? So take note of this, the patterns that you see on this chart. And I want you to tell me if you see any similarities to the S&P 500, because we're going to go look at the SPY right quick. Let's look at the S&P 500, right? Does this look pretty similar to the XLK?
Almost the exact same. Yeah, definitely very similar.
All right. So what we know is that technology has a very high influence on the performance of the S&P 500, right? Because the FANG companies have such a heavy weight on that particular ETF or index, right? So now let's take a look at Apple. Let's see what that chart looks like and if it resembles anything like the S&P 500 or the XLK. Now, does it? I got some of these technical indicators on here, so let me remove that stuff out of here so you can kind of see. But does it look anything? Does it have any type of similarity?
Very similar.
Right. So you see the same W pattern, and what you'll find is this pattern happens typically in the same month, right? So this was September of 2020, right? So now let's go to Microsoft. Let's see what Microsoft looks like. Let's see what September 2020 looks like on Microsoft. So September 2020, we had a W back here on Apple, and on the S&P, September 2020 looks pretty much the same, right? And you still got this upward trend on the individual stock. So again, when you're well informed and you study this stuff, you're in tune with what's happening in the market, and you can make a more educated decision about, or have a more educated conversation with your financial advisor, or if you're trying to handle things on your own. Let me see if I covered everything I was supposed to tonight. I think that was it, man.
That was it. That was it.
Did we have any more questions?
No, I don't think we got any more questions. They're letting us know, man. Very informative. thumbs up, okay symbols, the yo. Had to throw that up there one time. But yeah, man, great information, man. A whole lot of good information. Broke the market down in its simplest terms, simplest ways. Let everybody see from what a ticker symbol was to the different sectors of the stock market.
Definitely.
So if anybody's out there looking to understand what an ETF is, what a stock is, what a ticker symbol is, make sure you go back, rewatch this episode once or twice to understand things. Because like we talked about, the next episode, which will be the third Wednesday, we'll be building on top of this information. So make sure you grab it, understand it. So when you do come back and hear it again, and we do and build on top of it, you're able to follow along and keep it going.
Definitely. And guys, if y'all want to have an individual consult or, just contact me, you can go here and come to this page here. And look at that handsome fellow right there. That beautiful little one right there. But just click the link here and say, let's talk. That'll send me some information, some contact information about yourself. And we can schedule some time to have a conversation. Would love to be a resource for you. And if I can be a resource in any way, feel free to contact me. You can reach me at Terry Scipio, my first name, last name, at cplanning.com, or that's my email address. Or you can reach me at scipiofinancial.com. That's my website address. Or call my office line at 843-765-2010. And by all means, catch us here every first and third Wednesday on Dispense's Written Podcast.
Nice. You already know, Dr. Bar 2, we're going to do this every Wednesday, but especially first and third Wednesdays for Finances with Terry Scipio. The second and fourth Wednesdays, I talk to different entrepreneurs and medical providers about their life, what they're doing, so you can interact with them, ask them any questions you want. You can ask us any question you want. And tonight, if you want 50% off of Pill Talk Podcast merch, go ahead and follow Terry_Scipio, inbox him, Dispense is written, and we'll send you a promo code to get you 50% off Pill Talk Podcast merch. Make sure you do that tonight. Also, subscribe to the YouTube channel. Tell a friend to tell a friend to follow, because we need to get all the followers, because we want to make sure that we keep providing as many people out there with as much knowledge as possible. So
as possible, man. Simple, easy to understand information. Go back, leave us a comment on the video. Tell us what you want to see more of, whether it be charts we cover or just in general basic content. I feel like I'm pretty knowledgeable when it comes to the stock market. I don't know everything, but I'm very confident in what I do know. And I know what I know.
Facts. But that's going to wrap up tonight's episode. Dispense is Written Wednesdays, first and third Wednesdays. Co-host Terry Scipio. We're going to be bringing you personal finance information every time. We're going to end out this episode tonight. So see you guys a little later.
Nice. Appreciate you, people.
You made me the host again?
I am right now. Make the host.